Good evening, swimmers, and welcome to our Market Wrap-Up show for the first trading day of June. It's Monday, June 2nd, 2008, and I'm Chief Derivative Strategist with thinkorswim, Joe Keenahan. Well, the market today took it on the chin, kind of a rough one. The Dow Jones Industrial Average was down 134.5 points. We had 4 advancers, 26 decliners. Our only real major advancer on the day, GM, General Motors, up almost 2%. The other up things were not really great. You know, it's kind of funny, actually, if we look to the downside, we didn't see a big down move either today. In fact, one of our biggest down stocks today was American Express, AXP, down 2.37%. So then your next question is, well, what caused all this down sell today? What it really was a combination of two things. Number one, the ISM manufacturing index was ugly. Did not come, I shouldn't say didn't come close, but was very disappointing in terms of what was expected and what actually came out. So that was ugly. Before the opening, the tone was set with Wachovia Bank and the board forcing out their CEO, basically saying there were some problems there could be more problems on the way, including perhaps some compliance issues. That's not a good sign, so because of that, the CEO was basically forced out, and that had an ugly tone to start the day. The S&P futures were down quite a bit before the Dow even opened today. Speaking of the S&P futures, let's take a look there. We saw them down over 14 points today, just under 1386 even. Now, what very interesting to me, we've talked ad nauseum about 1394 in the S&P futures and 20 on the VIX. The VIX did test 20 today, traded there a few times, ends up closing at 1983. Again, we want to keep our eyes on that and see what happens there tomorrow. Volatility on the increase. For you volatility players, an individual stock you might want to look at, LEH, Lehman. Lehman's front month, 131% implied volatility. That may not mean much to you, so let's put it in some real number terms. With this stock closing today at $33.83, what does this volatility mean? It means the 17.5 put is trading 45 cents. With the stock at $33.83, we have 18 calendar days till expiration. That's, with those real numbers, you get an idea of how inflated the volatility in that stock is. So you volatility players, that might be a place to look. All right, what do we have on the horizon? Let's take a look at the economic calendar for tomorrow. And tomorrow we have factory orders. Again, the biggest number of the week will be on Friday with unemployment. The factory orders set the tone for tomorrow. And we have Red Book also. Red Book comes out, before the opening, but the factory orders come out at 10 a.m. Eastern, so a half an hour into the trading day. All right, as always, thank you all for joining us. I'm Joe Keenahan, Chief Derivative Strategist with thinkorswim. Good health, good trading. We'll see you tomorrow. Thank you all. Good night.